When you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, so we're going to look at the energy complex here. This is where we were last night when I sent the video out, and you can see we rallied up to the 382 this morning around 5 o'clock New York time, and then you can see the market broke down a little over $2,000, and of course, then you had a nice rally here of about $1,400, and let's just check and see if it also made a 382. And guess what? There it is right there. You can't make this up, folks, but that's exactly what happened, and it's a really good way of following markets real closely. We're going to have one right now for us too, if you want to try it, if you have some information to look at. Now here is the gold market. Now you notice we made a new low right here, okay? So what we have to do now, and remember this is just a 4-minute chart, let's do it with the 8-minute chart so we can see it a little better here. There it is right now. We've made a new low. Okay, so if this is correct, we should get a 382 retracement here in cattle very shortly. Just draw it in right here. So you've made that new low, and that'll bring you up here to about up about $4 up here at this level at 34.30. So if you sold it there, you don't have to risk more than $4. And this is a contract worth 342,000. You can see the big ABCD pattern that we had here this morning and last night. I mean, it had lots of things happening. Last night, one of the easy trades was this one right here. You can see here's where we Sunday night. Look at this perfect ABCD here in the gold, folks. Look at this, just absolutely perfect. I happened to be awake at that time, and there it is right there. You can see here, right on the money, and then it had a huge rally. Of course, I got out. I made about $8 on it. I didn't ride all the way up to the top, but these are the kind of trades that I'm looking at. But this would be the same type of trade, selling a 382, because you did make a new low, and that's how you determine what you're looking at on these cattle. I've already covered the cattle market. I've covered the soybean market. I've covered the British pound market, and I've covered the Russell market. And a Russell market is going to be a stop at 22.20. We get above there, then I think we're just going to book it and wait and see, because it's very bearish, folks. But these markets have so much volatility and enthusiasm that they could go a little bit higher. If they take these out, then I've really got something to worry about. This morning when we started up really fast, I said, whoa, I said something's not right. And so I said, we better tighten it up. But I can't do that in a video when we're moving, because I can't get the video out fast enough. But we'll get those out fast enough come Thursday, folks, because I've been promised that this thing is going to be working like a charm coming in on Thursday. And that's what we're going to be trying to look at. You can see here that the Dow Jones has just gone above the 382 substantially here off the high that we made right back here. Folks, look at this. This thing dropped from 4,500, okay, to 4,300, okay, 1,000 points. And look at this. We come back 400 points just in a matter of 700 points in just a matter of a few hours. So there's a lot of volatility in here. Now, there was one thing that was sort of telling you that they might be going up, and that was this area right here. The fact that they couldn't back off very much. And let's just see if that was a 382 off of the low that we made right back here. Nope, it didn't even come close. You can see here, that's what we're watching here right now. Now, let's get back to the British pound, because I want to explain to the folks what I was looking at in the British pound here today. There it is right here. Get up here and take a quick look at it. It's beeping right now. And because there we go. There's what I wanted to see. Hold on. Here's where we were. Let's get this rid. It's out now. I think it's over, yeah. Okay, here's where we were last night. You can see here on Friday, the rally went exactly to the 382 level right here. Okay, all right. Now we bought it right here. Okay, and I recommended selling it and buying it back on a pullback. And then when it went higher than the 382 today, I said, if it gets any higher than that, lower your stop to right here. That way you're going to lock in a profit, because that means that 382 didn't really mean very much, and so you want to lock in a profit at that point. So that's what I was looking at. So I try to manage it by ABCD and also by, risk control. You can see when you're trading these, you see the ABCDs that are here real easy. But the problem is, it's not how much money you make, it's how much money you don't lose, and that's what you're looking at. Regarding the Russell, I mean, we've made so much in that I thought, and I might still be right, but it doesn't look like I am today, that this has a chance to have a really big move. So I'm willing to give back some of that just to see if it's going to be able to fulfill the area that we're looking to see, which is quite a bit lower than where we are right now. Let's get that Russell back up here. I think this is it. No, this is the crude oil again. Get this out of the way. Oh, going here, talking about when you're talking about energy, we also follow the natural gas. And look at this, folks. When we had the same picture in the crude oil, look at the natural gas, folks. It dropped from 303 down to this level right here, folks. That's well over $1,000 with a risk of about 300. You can see just a perfect thing, just like we were looking here in the crude oil. It did the exact same thing, and it's moving down, because these markets sometimes move in tandem, and that's it. Now, the one that is running the whole show here, of course, is the NASDAQ. And as you can see, we're almost making a 50% retracement of the debacle that we had on Sat. Look at this. This thing went from 23,008 to 22,008. It dropped 1,000 points. And now we've rallied back almost 50% of that. There it is right there. So that's it. You can see this morning, once we popped through that, it suggested that we were going to continue to go higher, and that's what we're paying attention. I still think this is just a short covering rally after this big move down, but maybe I'm totally wrong, and it's going to go up and make new highs. And if it does, then guess what? It's bologna sandwiches all around. Okay, cattle, we've covered that. We've covered the soybeans. We've covered the British pound, and we've covered the gold. And let's keep an eye on the gold here, because we just have a position here that we want to be watching very, very closely. That if we get there, we want to see that if it gets to 34.30. Now, if it gets below here, you want to change that, because that means it's not going to do the pattern that we're waiting to see. So those are the main ones that we're looking at today. We need to look at the euro today, folks, and also the dollar yen. That's been another big one that was really big today. Get the euro up here. Here's the euro. It was also acting weaker, it shouldn't have. Let's get this out of the way here. This is on a really 8-minute chart. Let's just get it up here on the hourly, and you'll see there's where we are. Okay, you see, it couldn't even take out these highs. See that from the front? Look at that. It couldn't take out these. The pound took it out by just a little bit, but this couldn't. This is telling you that, hey, maybe the dollar, has got a little bit more to go to the upside. So that's why you tighten these stops up, because you don't know if it's really good. You have a beautiful 382 pullback here, and it should be going up here, and it's not. That's a money management, because it's not doing what you think it's supposed to do. So get out of Dodge, go to someplace else, and follow the ones that are working the best. That's the way we want to be looking at them, I would think. Now, we just hit the 50% level here in the S&P. I just heard the beeper go off. There it is right there. We just hit it at 353 and change, 1 point off. And you can see here, no back off here at all, just boom, straight up. This is all people just, please let me in. I missed it here. Please let me in. And folks, if we go below here, it's going to be please let me out. But that might not happen. So if it doesn't, then look out, because this is a big move. We dropped 44.65. We dropped 240 points to the downside, and we've already rallied back 110 of that. That's why it's at 50%. So this is a wild volatility that we're having here. That's why when I'm watching these things and I've got a big profit in something, I'd like to maintain as much as I can and hold my position. But boy, it's really not very easy because you try to get out, and my goodness, well, let me get this straightened up here. I got too many things working at one time. Let's just cascade these so we can see them in a hurry and get back to that Russell, because that's the one we're still in. And I'm doing that this way, as you can see. It hasn't came anywhere. There's the 50% in the Russell. If we go above 2220, then that's where I'm going to say we take that off. We remember we sold it right here at 2270. From there to there, folks. Hello. Somebody's talking. I don't know what that is. $6,000 that we're going to be moving over here. Nobody helps me with this.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, as you know, I've looked at markets all over the world because of the ABCD patterns, and you can see here that we had a big gap down in the DAX. It stopped just exactly at the 78% level right here. If you'll notice, the FXI It was down quite a bit, and then it rallied a little bit. This is the Chinese market. You can see it's still very bearish, but it's bouncing up a little bit today. And then also Hong Kong. We had a big move down in Hong Kong. It opened lower and then rallied up and then broke really hard, but it stopped right at the 61% retracement. And that was my first indication that's saying, well, maybe this is not going to go down today. But there was one other one that was really interesting, and I'll cover that at another time because it's a very large market that I don't trade, but it does give you a little bit of heads up because of risk off, risk on. But all of these patterns, now here is the big one in Microsoft. You can see it still has this big gap, this breakaway gap to the upside. I said if it gapped down below here, I said it would leave an island reversal. It didn't do that. So far, the rally back on this has taken us just about back to the 50% level, just like what we're looking at in the S&P and then also in the NASDAQ. And remember, folks, these things can go up and keep going and going and going, and then we're going to see a spectacular blow off to the upside, which I will not be involved with, I'm pretty sure, but we're going to be watching it very closely. Stan Harley will be our guest here at the break, but I want to talk a couple of things. I've already covered the cattle trade and stuff like that, and the soybeans, I've already covered that. But I do want to go back and look at one of our old favorites, which is wheat, because it's down to a level that hasn't been in a long time, and it's trying to make a bottom. This is where, what as you can see here, we're setting right here today, making a new low on Christmas wheat. Now I'm already long the beans, so as you can see here, I would say to buy this, to be a buy here at buy it at 530. So far we've been to 533. We haven't quite been able to get to the bottom, but there's your ABCD. There's your longer ABCD way back here at 529. So I'm trying to buy at 530. You can see that. See, there's your ABCD to the downside. You're setting right over it. Maybe it doesn't get there today because this morning we had a little bit of a rally. I'll show a small rally, of course, but you'll see it had a pretty good rally, and then it's come back down again. So we're still looking at that low down here at 530. We got to be patient to see if we're going to get it. We might miss it. If we do, we have a strategy to get in and let the market go, buy the first pullback. And that way your risk is going to be under control at all times. Okay. Now, regarding the corn, the Christmas corn is near new lows. I haven't checked it recently because I've been busy in the fire pit with the currencies and crude oil and all this other stuff. But there's the corn has made new lows. I'm going to bring this up here to show you again. We're waiting to see it gets a little bit lower. Okay. And that's going to be down here at 503. That's going to be the bigger move right here. You can see it as we draw this in right there. There's the 503. And we've been buying it with a stop at 393. You'll become a farmer. You don't have to rent the land or buy the crane or any of that stuff. And you don't have to worry about the weather. All you do is you become a farmer at the Chicago Board of Trade, and you buy it and you put your stop right below here for 100 acres of the beautiful golden grain that everybody in the world uses. And this is the largest crop in the world, is this one right here, folks. So we'll keep that in mind as we go through. Now, there's one other one related to protein that is already bottomed that we talked about the other day, and I haven't seen whether it continued on today. I would imagine that it did. Hold on, because of the fact that we've had a pretty good rally in the beans. Just one second here. I want to get the soybean meal up here if I can find it, and I will cover the bonds here in just a second, folks. Here's our soybean meal, the December. See if it's still rallying a little bit. Yep, it's still jumping up here. You can see we made the ABCD here. This is well up over $1,100 now on that ABCD pattern. It was perfect because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days down. 1, 2, 3, 4, 5, 6, 7, 8, 9 days down. Right at the ABCD, and boom, look what it's done. That's the value of the ABCD. And they happen all the time, folks. I mean, they're on different time frames, but there was another ABCD that we had right here. ABCD, look at that. See, that's where's your 3 drive comes in. There's drive 1, there's drive 2, there's drive 3, and that's what you need to know. Don't know anything about fundamentals. You just have to look at that pattern. And when you get that, you got a pretty good shot at. That's what I try to do each day, is to line them up like this. Now, Stan Harley is going to be our guest here for a little bit, and then we're going to find out what Stan has to say, because he has been right on these markets for sure. I don't know what his status is in the market right now, but he's certainly going to give us a good jingle when we have him coming up. Let me check this. Oh, I haven't checked Apple yet. Several people have asked me about Apple and also the world's most famous stock, which is Tesla. And let's get Apple up here first so we can see it. There's the daily. Was hit pretty hard. And, well, it's still getting hit hard. It's up, but boy, not by, no, it's actually, yeah, it is up by just a little bit, but boy, not by much. Some of these markets are not doing well, folks. And there's a few stocks that are, but a lot of them aren't. And we'll look at Tesla next, and we'll see how it's doing. And we'll see where we go here with Tesla. It should be up today, I think. Well, it was up, and it is up, but it's not up much. You can see it just had a little bit of a rally here, not doing too much. But it's just a handful of these real expensive stocks that are making these things work, folks. Well, let's take a little break. 877-927-6648.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're going to go across the world here and look at these markets. These are weeklies, folks. There's your German DAX making a beautiful ABCD pattern up at the top. As you can see, it's been there for several months, and it has the big break now. We took that low out by just a little bit. Right now, we're making a little bit of a bounce from that level. The next one we're going to look at is the emerging market. This happens to be Singapore. Hold on one second, and maybe we got Stan in the house here now. And Stan is in the house. How are you, my friend? Hold on one second. Let's get that band playing and everything else. How are you, buddy?
I'm doing just awesome, Larry.
Are you loving this volatility?
I am, yes. It's exciting.
I am too, that's for sure. Sometimes more than others. I loved it really a lot on Friday, but not so much today. Let's continue. Tell us what you've got going for us, buddy, and we'll get moving here. I've got to turn the screens off. Oh, I think I already did that. Hold on, they're trying to give me some type of a...
You're getting all kinds of dingling there, I can tell.
Yeah, well, I don't know what's going on. I'm not very technically oriented, as you can see now. I'm out of my environment now. It's jumping around, everything's flashing, and I don't know what it means. There's no way I can get to Stan says you're not showing any charts yet. Is that correct? Do you have any charts up for today?
Well, I do. I saw it on the screen here. Looking
okay,
at
they're up there right now. So why don't we go right ahead, and we're listening.
Okay. I think, Larry, we're in the very early days of a modest correction. We're making a trading cycle decline. We made a trading cycle high on July 31st last week, and we're probably going to go down for about 5 weeks into the Labor Day time period. We did a very similar thing earlier in the year, where we topped out in December, and we went down into the middle of January. We went down about 25 trading days. I see essentially the same thing happening in the present time frame. This is a chart on the screen that I have shown many times with you and the viewers in the past. It's a cycle that nominally spans 80 trading days. And this cycle, like all market cycles, it's an accordion and expands and contracts. In fact, for a while there, late last year, I was on the air with you talking about it's coming. Well, it didn't come. And what happened was the cycle gods up in the sky were going to do their very, very best to make Stan Harley look foolish, and they made the cycle disappear. I don't know if that's ever happened to you, but boy, it
frankly
sure
not.
To me.
I've never been wrong.
Well, if I had
today.
two good looks and your precedence, man, oh man.
Yeah, right.
But what happened to the cycle? It did not disappear. It expanded by the square root of 5. And I only realized that about 2 weeks ago. And that square root of 5 is a function that shows up 2.236 all the time in the markets. I just recently recognized it. But from one of the prior occurrences in the cycle, which was in July of 2024, it expanded by 2.236 at the root of 5. And by golly, it nailed the April 7th bottom within one trading day. And then if you add 1.00 to that, again, it aligns with July 31st with a standard deviation of 3 trading days. And July 31st was, in fact, the high in the S&P. I mean, one can see the chart of the cycle I've highlighted with the purple vertical lines. And below that, I've got the regression analysis of all the dates in the spreadsheet. And the cycle works out to be 80 trading days, and their standard deviation is 3 trading days. And assuming it continues without any moving around, then it's due once again around November 21. with a standard deviation of 3 trading days. And then I'm suggesting a more important high later next year, maybe around the 5th of February, but that's way down the road. We could talk about that later. The important thing is I think we've made a trading cycle high, and now we're heading down. We were down sharply on Friday. We're doing a little snapback right now. I think it'll run out of juice here by the end of the day, and then I think we'll slowly start stair-stepping our way down. So where is this thing likely to end? Well, I have a possible answer for you. Here is another chart of the S&P through the beginning of 2025 through the present. And what I found is the market has had a tendency to make cycle lows every 17 trading days, plus or minus maybe 1 or 2 trading days. And the genesis point for this cycle was the February 19th, 2025 high. So you can see I've marked with purple vertical lines the dominant lows that have taken place following the February high in the S&P. And the data works out to a cycle of 17 trading days. The next recurrence in this cycle is due right around a week from now, 5th to the 8th of August. That's Friday, Monday. And then the subsequent recurrence of this cycle is due right around Labor Day, the 3rd to the 5th, right in there, plus or minus a smidge. So I think we're going to do a little wiggling and jiggling, kind of an ABC corrective process. But generally speaking, I think we're going to be down into about Labor Day. And then we should be, that should work off all the overbought condition. And then we should have the technical underpinnings in place for the next power move higher. Here is another chart that I think might be interesting to you and the viewers. A pattern that I've noted seems to occur about every 4 or 5 years in the market. Sometimes it's the Dow, sometimes it's the S&P. But what happens is the market has advanced in this bull market. It's made 3 stabs at an overhead resistance level. And those first 3 stabs have been failures. So in this case, look at Dow 45,000. And notice the Dow Industrials moved up to that area in December, then again in late January, and then most recently in July. And each of those 3 attempts were failures. Some technicians might look at that and they'd say, oh, Stan, Larry, look, triple top. This market is toast. Yeah, well, maybe. On the other hand, W.D. Gann might say, yeah, there's this pattern called the rule of 4. And it states essentially the following, that is the 4th push against overhead resistance is open.
Got to pay a few bills, my friend. We'll be back with Stan Harley, folks. Harley Stock Market Letter.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer, the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Back, folks, talking with Stan Harley. Please continue, my friends.
Yeah, Larry, I wanted to just spend a little bit more time on this Gann Rule of 4 setup. What I see developing potentially here is the third push against Dow 45,000 being essentially resistance. We're going to back off into, I believe, into the Labor Day time period, about 25 trading days from high to low. Pretty much what we did from the early December high into, for example, we topped out here around December the 2nd, basis of Dow. We bottomed on January 13th, I believe it was. That was about 25 trading days to the downside, kind of an ABC. I see a very similar evolution evolving here. About 25 trading days off the July 31st high should take us down into the Labor Day time period. That'll be the second 17 trading day cycle low. And then the market will be sufficiently oversold to grind higher. I think on the fourth push at Dow 45,000, the market punches through with a vengeance. And I think we catapult significantly higher on that next advance, which would be in the last quarter of this year. That's coming. But between now and then, I think we're going to do a little wiggling and jiggling with the move primarily to the downside, as I said, into about the Labor Day time period.
Yeah, that makes really good sense. That's for sure.
Lastly, let's take a fresh look at Bitcoin. This is a chart that I shared on the air with you and the viewers a number of times in the past. This is a monthly, or it's a log chart, I should say, of Bitcoin going back to the very first day of trading in July of 2010, about 15 years ago. And it's a log chart. And there's a couple of things that come to my eye that are worth mentioning. Number one, the highs, as you can see with the purple lines, have been separated in months by numbers related to the Lucas series. For example, number 29 is a Lucas number, and as you can see from high to high, that was exactly 29 months. The subsequent pair of highs was within 2 months of being a Lucas 47 count. The next pair of highs was exactly a Lucas 47 months apart, and I'm theorizing that the present pattern will also be a 47-month high to high, plus or minus. So that would suggest a little bit later this year, we might see a significant high occur in Bitcoin. Now, on the y-axis, one thing that I've noticed, Larry, is every time the market has moved up into one of these highs that I've marked with purple lines, every time it's moved a little bit above a base power of 10 number. So for here, we got above 10. Here, we got above 1,000. Here, we got a little bit above 10,000, and so on. Every time we've moved up to a base power of 10, we've pulled back below it. So the base power of 10, which is operative right now, is 100,000. So I'm theorizing into this next 47-month cycle high, we're going to get a little bit above 100,000. We are right now, of course. We're going to get a little bit more. And that should be all she wrote for the current move. And then we'll back off again, and we should, if history is any guide, we should be back below 100,000 once again.
Okay, wow. It's certainly a lot of people trade that stuff. I watch it sometimes over the weekend, and there's always somebody out there trading 24/7. The market that never sleeps.
It never
have you ever traded it, Stan?
Larry, no, I have
Neither
not.
have I. I haven't either.
Not because I'm afraid of it or anything like that. No, I do the analysis on it, but I'm primarily a stock market kind of guy. So I trade stock market and everything related there too, whether it's ETFs on the stock side of the house or futures on the future side of the house. That's my focus.
Well, I think that's the safer side, that's for sure. Listen, we want to thank you for being our guest today. We'll have you on again in a couple of weeks, but anytime you see something that you need to talk to us about, just give me a jingle and we'll put you at the top of the list, okay?
Thank you, Larry. My pleasure.
You
always.
bet. Yes, our pleasure. Thank you for joining us. Stan Harley of the Harley Stock Market Letter, folks. He's a stand-up guy, and boy, has he been right. All right, pay attention to those dates, folks. August 8th is a big one, so that also happens to be one of those big A dates with the astrology that may or may not mean something. So far, the S&P did hit the 50% retracement at 63.53. It's backed off. Wow, 9 whole points. Whoa, 10 points now. My goodness, it's a bear market. Anyway, the Dow Jones has dropped 100 points here in the last 20 minutes or so, but this is a short covering rally this morning, folks. Unfortunately, when they happen, you just don't know when, and it's really difficult. That's why when you're in a position like we have with the euro, let's try it again, Larry, with the Russell. You have to play a game where how much money you're going to lose, and if we don't get above this 50% level, that's why we want to be watching it very closely. So, oh dear, and I forgot to bring the charts up because Stan quit. Oh boy, just a minute, boys and girls. I'll go over it. I'll go over it again so we can say where we are. Here's where we are with the Russell. If we get above here, 22.22, then we will take see, that'll be a $4,000 profit. We still had another 4 in here, but we're still shooting that we could possibly get it if this is nothing more than a rally that we're seeing possibly. There's the NASDAQ you can see at the 50%, and also the other one was the Dow. Was the S&P. Hold on, somebody's calling me again. Maybe they can't even see a chart. It's still not coming through. Well, let me give it a shot again, folks. Well, let me try it again. I'm going to see what's going on. Hold on a second here. Get up here and get the entire screen set up and hit that. And that should give us to the entire screen. I hope that's where we are. The stop is right here at 22.22 in the NASDAQ, the Russell, folks. That's what we're watching, okay? There's the number. The 50% retracement was right there in the Dow, just a second here. Get this up. Boy, oh boy, if this isn't it, then I don't know what's going on. Well, I have some technical difficulties here that I'm not able to take care of because I'm doing everything that I usually do. I'm sharing the screen. I go up and I try it again, and I go to the entire screen, which I do, and then I click on it again, and that usually brings it up. If it doesn't this time, then I don't have any idea what's going on. But there's your 50% retracement of the whole move down. Like Stan said, you know, he thinks this is just a short covering rally, and there's another low coming in here. Whether that is or not, I don't know. I know why this happened. I will share that with you the next few weeks because someone showed to me over the weekend that there was a chance to see a really strong rally today. I didn't believe it, but he made a very good case for it, and now I have to follow some more research on that before I tell you what's going on. I have to get his permission to share it, but I think that'll be no problem. Regarding the British pound is selling off a little bit. We took a profit in that. You can see it's backing off. What we're going to do now is go to one of our favorite go-to trades, and that is to watch the 382 retracement here. So if you go from the low that you made back here on the report, remember that was the daily right there. That was a $1,500 move, and now we want to watch for the 382 retracement that's going to come in here down about another 30 pips in the British pound. So pay close attention, because if it's bullish, it's going to hold that level. Okay, folks, we'll be right back. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, getting back to where we were, we dropped 220 handles here yesterday. We rallied back 100 handles. We're sitting right at the 50% retracement. You can see the early morning short covering rally just flew through all these numbers. If this is correct, we could get to here. We could get to here. If we go above here, I'll have to reconsider my bearish position. But with all those ABCD patterns that I'm seeing all over the world, it's not unusual to see this type of action because, this thing's been going up for 15 years. It's not going to give up, in 1 or 2 days. So that's the key. This was a fact that was a little scary there, but the fear disappeared here over the weekend, and have a pretty good idea why that was, but we're going to cover that at another time. So just remember, this thing could go up a lot more. And the Russell that we happen to be short, we shorted at 2070. We got to stop at 2022. That's where we've talked about it several times here this morning, and I guess it's right here. With a little luck, we'll be able to see it, and that's where our stop would be, right above here, 2022. That's 12 handles from where it is right now, and all we did so far from the high here the other day, it looks like we made a 78% level here. No, 61% retracement this morning of that number. So this is the key number right here, 2022. You get above there, something's wrong, because you got to lock in something, because you're up 6,000. Okay, now you're only up, if you get above there, you're only up 2,000. You've got to book that, because it could go higher and higher. And this is about risk control and money management, and that's the whole key to what we're watching. So live every day in an attitude of gratitude, and may God bless. And we'll see you folks on the flip side tomorrow, and have a wonderful day.